You don't have to go all in on risk to grow your investments. Fidelity's All-in-One Conservative ETF, or FCNS, can help offer a balanced approach. Figuring out the right mix of stocks and bonds can feel a bit tricky at times, especially if you're not looking to take big risks. Don't worry. FCNS invests in a balanced mix of bonds and stocks and adds a tiny bit of crypto, all in one easy-to-buy ETF. Maybe you're just starting out or just looking to dial down risk. Think of it as a twist on the classic 40-60 balanced portfolio. FCNS leans more toward bonds than stocks, giving you a more cautious asset mix. It's built to help you start adding stocks to your portfolio without stepping too far outside your comfort zone. Here's how it breaks down. The ETF holds roughly 59% of its investments in bonds, 40% stocks, and 1% slice of crypto. FCNS is a fund of funds, which means it holds other Fidelity funds inside it. You don't have to pick the bonds and stocks yourself. Fidelity does it for you. Rather than trying to own a little bit of everything, FCNS uses rules-based investing to be more strategic. If you don't know what that means, don't worry. On the stock side, rules-based investing uses filters to find companies that follow a certain set of characteristics. Some examples of these characteristics could be companies gaining momentum, high-quality companies that have provided steady results, stocks that typically hold up better when markets get rough, or companies trading for less than their worth. The same idea for rules-based investing applies on the bond side as well. It's screening for investments that can give stronger risk-adjusted returns and screening out the ones that carry too much risk. But FCNS still uses expertise from portfolio managers on both the stock and bond side of the portfolio. This means that portfolio managers are actively choosing some of the investments that go into the ETF. With this combination of active management and rules-based investing, you're getting the best of both worlds. FCNS stands out because it's not built like most ETFs. You get the benefits of Fidelity's research, global network of analysts, and portfolio manager experience. Second, FCNS is built with diversification in mind. The bond exposure in FCNS can make for a steadier, more predictable returns. On the stock side, you get access to different types of companies that tend to react differently based on what's happening in the market. Maybe when things are going well, people will want to spend money on restaurants. But when times are bad, they will be shopping at the grocery store. Being invested in different types of companies can be a good way to be prepared for different scenarios. The final piece of the pie is crypto. There's exposure to Fidelity's crypto ETFs. Not too much though. FCNS aims to keep this around 1%. There are no keys or digital wallets, so it's another easy way that FCNS adds diversification. FCNS is for people who want access to a range of investments without handpicking everything themselves. So what else is there? Markets can fluctuate and cause your investments to go out of whack. But with FCNS, it rebalances automatically, so if anything drifts too far, you can relax knowing it's keeping the right mix you initially wanted. That's one of the goals of investing conservatively, right? FCNS gives diversification, access to bonds, stocks, and crypto, plus regular rebalancing, all in one easy option. You can use it in a TFSA, RRSP, or a non-registered account, typically as a large part of your portfolio. It works across different account types depending on your plan. The idea is long-term steady growth. Nothing too fancy, just something designed to give a smoother ride, all in one. If you want to know more about FCNS to decide if it's a good fit for you, check out the fund page linked below. Thanks for tuning in.